The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 22nd, magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who believes we should always be pioneers of our future versus prisoners of our past. And hope everyone out there had a fantastic weekend. I know I did. And let's always remember as we begin our day that life happens for us, not to us. And when you and I, we can make that one little shift, and one word out there, it'll make all the difference in the world out there. Again, hope everyone had a fabulous weekend. I'm grateful for your presence here today, and of course, I'm here to serve you. That means you can pick up that phone and you can dial in at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up about 46 points, trading out at 17,806. S&P futures up 3, trading at 2070. NASDAQ futures back 2 points as we speak right now. Russell 2000 up just slightly. King dollar back about 8 pennies, trading out at 89.75. Light sweet crude is down about a buck right now. Gold is flat. It's trading out at 11.95. Silver's off 6 pennies, trading at 15.96. Natural gas getting hammered this morning, down 7%. Off about 25 cents out there. A quick peek across the globe. Let's go see what's going on over in Europe this morning here. The DAX right now is up about 1%, up 98 points. The FTSE up 55 points out there. That's up about 0.8%. A sea of green in Asia last night. The Nikkei 13 points. Not, kind of an unchanged day for the most part out there. The Hang Seng was up 291 points. Nothing unchanged about that. Up over 1%. And the Shanghai up 0.6%, up 20. All righty. So where do we begin the day out here? Let's begin the day, and it's going to be a slow week. Many of you may be traveling or getting ready to travel, so please safe travels out there. No drinking or driving. As everybody prepares to for the festivities of the week. That means inside the markets, we're going to have a light volume week out here. Of course, the market is open today, tomorrow, Wednesday until about 1 o'clock, I believe, and then it's back open on Friday. So always kind of odd for the markets to open up the day after Christmas, New Year's, and so forth. But it is what it is. What you can expect is light volume inside of the marketplace. So using volume really as a benchmark this week is kind of I don't know. It doesn't have as much meaning, let's say, as it might in prior weeks. But what we should do first is let's do this. Let's look at a number of different things on multiple time frames. Let's start off by taking a look at Goldilocks. So let's first look at gold. I'll put this on a continuous contract out here, and let's go take a look at what we can see here from a monthly perspective. So here's the monthly chart for gold. And number one, let's take a look at a trend line. Let's take a look at a trend line, a longer-term trend line. This is the one that's going to come all the way back here to the October 2012 high. So that's going to be our first touch point out here. And I think it's probably best to, in fact, let me do this. Let me turn off the market profiles and a couple other things just for the moment, just to give us a clean little palette out here. So let's turn that off. Let's turn off these two moving averages. There we go. Got a nice clean palette out here. And you can see I didn't really draw that really well, but let's try to adjust it. There we go. So there's our red trend line. So what do we know about gold? And the trend, what's nice about this longer term monthly trend is that we've got at least 3 touch points out here. And again, I'm starting back here with the highs back from the month of October 2012. That high was at $17.98 $1,798.10. So we're using that as our first touch point out here. The high in July becomes our July of 2014, I should say. That's priced out at $1346.80. It becomes our next touch point. We can see the price was touched and contained basically inside there the following month of August. The same thing is true in September. And, of course, at this point, the same thing is true for the current month that we're in right now, the month of December. So when we take a look at a longer-term perspective of gold, it's really to one extent, it's not unusual that it's struggling to break above this longer-term trend. If we do see it close above that on a monthly chart, now again, it's a continuous contract that we're looking at. But if we do see it close above that, and you might ask me, hey, what's that high? Well, for the month of December out here, the high so far has been 1239. So it's going to have to be something a little bit above that area. Of course, when you break a trend, what you want to see is you want to see price come back and test that trend, reject that level, and then continue on its way, whether it's the upside or to the downside. So monthly basis, the gold contract out of the continuous contract has got a trend line. We've got an A to B equals CD as well on the monthly chart. This, of course, would take us all the way back as our A point back into September 2011, up to that 1923 level, and then all the way back down. Our B point is December of 2011, and then we've got a C point that we used here for our trend line. That's October 2012. And price is basically made, not basically, it has made. It's made a 1.618 A to B equals CD expansion to the downside. Now, that level, that price projection, by the way, 1151.22. What we actually saw here was during the month of November, a little doji candle that formed on a monthly basis. Does a doji candle have any meaning to Stevie at the bottom of a trend? Absolutely not. At the top of a trend or at the top of a resistance area, a whole lot of meaning. Here, it just really means that the market is tired. That price point, by the way, that we saw get hit was 1130.40. 1130.40 versus the 1151.22 level. Does that mean a whole lot? No, we use this as a guideline. Candle-wise here from a monthly chart perspective, month is not over, but we're getting close to it. You got a little bullish engulfing candle that has formed at the moment. But that was easy to do with last month's doji candle out there. So that's what's going on the daily chart, or the monthly chart, I should say, for gold. If we switch over and take a look at a weekly chart, see if there's anything else that shows up for us. Here's this little doji back here, back at the lows in November. We can see that trend line that we're dealing with out here. We can see what we can see is higher highs. We can see some higher lows that have formed out here. So that's an indication of a potential bullish move. I think we might also have the A to B equals CD that actually completed. If we come down to the bottom of that doji candle, the week that began November the 3rd, that's your A point. Your B point out here is November, the week that began November 17th, and your C point, the week that began December 1st. So we also know about gold as it was making that move into that trend line. It also was making a 1 to 1.272 A to B equals CD to the upside out there. So it does that. That price projection, by the way, on that pattern was 1239.90. The actual high that we saw was 1239. Are you kidding me? Does it really work that well on a $1,230 vehicle? Well, the answer is yeah. But are we that concerned whether it hits it on the penny or not? No. We're using that as a guideline level. So we know that we've seen a 1 to 1.272 A to B equals C to the upside. Last week out here, you got a little dark cloud cover candle. What's a dark cloud cover? Well, if we take a look at two candle reversal sessions, dark cloud cover on a scale of 0 to 1 to 5, right, there's going to be basically a level 2 type of candle, maybe a level 1 out there. So it is the weakest, one of the weakest of the reversal signals. And however, that says that this week is pretty important, because if we do see a lower close this week, last week we saw gold close out at 1196. You're trading 1195.60 right now. A lower close this week, meaning on Friday, would suggest, okay, we're going to see some other type of retracement. And if gold were to close back inside that swing point from November 3rd, that's a weekly chart that we're looking at. That high is 1179. So I'd have to say 1179 is the number to be watching inside of Goldilocks. I would say, okay, either some type of retracement, 618, 786, and let's go see what those retracement levels are. Let's go from that A point all the way up to the D point out here. And the retracement levels to be watching are going to be 1171. 1171.90 happens to be your 0.68 retracement. But then you go back to kind of just normal swing point analysis out here. And you say, hey, if you close inside a swing point, that's above the 1179 number out there. That says, hey, you can go back and test it. Of course, volume-wise, you want to see is volume coming back into that level with is price coming back in a level with volume. If it is, meaning more volume than that swing point, that says you're more likely to go test the bottom. If not, then maybe it says what you're going to do is a 0.786 retracement down at the 1153 level. Why are we taking a look at this? Look, at this stage here of the game, we need to understand where resistance is. We need to understand where support is. That's really what technicians are going to do, or what we should be doing, and understand where the battles are being fought. And we're taking a look at gold. So we've got gold on a monthly, we've got gold on a weekly, what its messages are. If we switch over to Goldilocks on the daily chart, inside the daily chart out here, let's just switch over to the current contract for gold. What we're going to see here, of course, that's probably been here. No, we're not going to see. We're going to see here is two shorter-term trend lines. So these trend lines here are important as well to observe. What we can see here is there's nothing more, in my opinion, there's nothing more bearish than a failed bullish pattern. We saw on the shorter-term trend line, we saw price go ahead and try to move above this, break out, do it with wide price spread, accelerated volume, and it failed because price came back into it. So nothing more bearish than a failed bullish pattern out there. Likewise, I think I was catching just the end of John Logan's show as he checked in and kicked off things here at the Hotel California. He was talking about FedEx. You may remember the day that FedEx released some numbers. Maybe it was their financial numbers. I can't remember. It probably was their 10Q. Was we saw an island reversal inside FedEx. Now, price has gotten back up there. In fact, it might have been a day later, 1 or 2 days later, when price got back up inside of FedEx and closed that island. That island reversal no longer there. Now, it hasn't gotten above those highs, but if FedEx ever does get above those highs, there's nothing more bullish than a failed bearish candle, and that is a significant one. Back to the ranch here, back at gold, take a look at its daily chart. So we know on the monthly chart here, just to summarize, up against significant resistance, that trend line. On the weekly chart, you completed an A to B equals C to 1 to 1.272. You got a little dark cloud cover last week. On a daily chart, we saw a breakout, which has been a failed breakout at this stage of the game. Until gold breaks out at least above last week's highs out here, gold has failed. Absolutely failed, and that says you got to be kind of neutral with regard to a Goldilocks. And I would say that the same holds true for the miners out here. What that really means is just make sure you have stops in place. If you were trading the gold contract, you'd say, probably a close below that 1181 level is going to set up and move down to about 1152 if we go ahead and we use our TAS market profiles out there. So that's what's going on inside of Goldilocks. If we go do the same kind of a thing with regard to light sweet crude out here, let's do that. Let me switch back over. And we take a look at light sweet crude on the continuous contract on a monthly chart out here. We'll see light sweet crude right now trading out at 56.29. Actually, in the case of light sweet crude, well, I guess maybe it does show up out here on the monthly. Okay, what do we know? Well, actually, let me do this here. I'm going to switch over to the quarterly. That way you can visually see it out here, because the quarterly takes us back to the lows that we're going to use as our benchmark to identify our retracement levels. And that low going back to 2009, January 2009. So from that low to the high that was put in light sweet crude on the continuous contract back on the April 2011 area, that the $50.67 mark is your 0.786 retracement. We've seen light sweet crude get down to 53.60. 53.60 versus 50.60 within $3. When we get back, let's look at the monthly. Let's look at the weekly. Let's look at the daily chart out there, and we'll figure out what is going on with these markets. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 52. S&P is up 3 points. We were taking a look at light sweet crude just before we went into the breakout there. Now, we're going to go take a look. We started off taking a look at the quarterly chart. That way, you're able to take a look at easily on your screen if you're following along with us on Tiger TV. And it's a beautiful thing because you get us in HD out here. We were taking a look at the quarterly chart just to identify the retracement level, the 0.786 retracement level. So here's what we know. We take a look at a monthly chart here for light sweet crude. Again, it's the continuous contract, just so we've got enough data out here. And we take a look at the A to B equals CD down pattern. What we can see is that in this case here, let me just delete down. Son of a gun out there. I don't know. Now, let me try this. I think this is still going to pop up the same thing on my screen out here. I think I don't have it possibly reset out here. I wanted it all in yellow and the 2.618 A to B equals CD. But I can go ahead and adjust that. Look, at this stage here, let's not worry about that. What we know is from a monthly standpoint here, we can see that price moving along that C to D leg here. It's in the strong formation. That says lower price out there. So 50.67 on the quarterly chart is its message. I'd have to say on the monthly chart right now, 50.67. That's really the next test. Doesn't mean that's the bottom. That's what the monthly is saying. Let's go see what the weekly chart shows for us here. Saw a little bit of a bounce last week inside of light sweet crude. Seemed to make a lot of the headlines out there like a bottom was in. But if we just simply utilize our Japanese candlestick charting, because what I can tell you about a market that's moving lower, the first possible time that you're going to see some kind of reversal is when you see a bullish reversal candle out there. That holds true, and the markets are moving higher. The first potential, and I do say potential because you want to understand your patterns out there, the first potential sign that the market is going to move lower is if you see a bearish reversal signal. So right now we're looking at the weekly chart here to see what kind of signal did we have last week inside of light sweet crude. Is that a bullish signal out there? The answer is absolutely, positively not. We did not see that. You got a little high wave candle. It does say that the market was a little confused out there. That's all. But at this stage here, continue to move lower down to the 50-67 level is really what the weekly chart is also communicating to us. Now, maybe a different story here if we take a look at the daily chart. Let's go take a look at the current contract. Let's switch back over here so we can take a look at the current January contract inside of crude oil. Let's go see if we can find any bullish reversal signals. You're going to see them first on a daily before you're going to see them on a weekly. And the question is, do we have anything out here? And the absolute answer is no, we do not. So even on the daily chart here for light sweet crude, we don't see anything that gives us a sign of a reversal on its chart out there. What's that say? 8 on my screen. Let me put this back here. Let me do that. That was kind of weird. But, yeah, I am looking at the daily chart. I must have typed something into my screen out there. So no reversal signal yet on the daily chart either for light sweet crude. Those two little squiggly lines coming across my screen out here, the purplish one, the white one out here, that's your 8 and 13-day exponential moving average out here. 13-day exponential moving average right now, priced at 16.13. That has acted as really strong resistance on any kind of a bounce out here. So if we see it close above that level, which is $60.13 in, maybe we have something out there. That's what's going on inside light sweet crude. If we go take a look at natural gas as we speak now, right now off 23 pennies, that's a pretty big move to the downside out here. What I had mentioned Friday, I think it was Friday, it was either Friday or Wednesday out here. If we take a look at this pattern, this is the pattern that's important to pay attention to. Well, that's if I can find it. Here we go. This is the seasonal pattern here for natural gas. Slideshow from current slide. There we go. This is, forget about the numbers on the left-hand side. Don't worry about those. What natural gas typically does, and this is going from January 1st through the end of the year out here. Typically what you see inside natural gas is a low that comes in during that first week of September. It ends up making a high in the first week of December and then continues to move lower out here. In fact, you can see even January down into the February time frame of the year, price continues on average to move lower out there. Kind of interesting. Well, if we come back and we take a look at the actual chart out here, we're going to see that the high so far that we've seen inside the current January contract for 2015 for natural gas actually made a high on November 20th. Didn't make it all the way to that first week in December. However, the idea that it's been trading lower out here, that just simply is going along with the seasonality that we have seen in prior months. Now, what we can do here on a daily chart is just try to understand, has the rubber band expanded just a bit too much? We're just going to take a look at expansions between swing points out here, and that says that the 1.618 expansion of its last set of swing points, which is the October 27th, 2014 low, to the high that came in out here back on November 20th, that the 1.618 expansion takes us down to a price point of 3.102. That is likely its next move to the downside. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up there with trade on 17th out. S&P up 2 at 2,072. Composite off 3 points, trading out at 47.62. Russell 2,000 is flat. She's trading at 11.96. And let's go to Jerry in Nashua, New Hampshire. Jerry, thanks for calling. Thanks for holding. How you doing today?
Good, and yourself?
I'm doing excellent. Did you have a nice weekend?
Yes, very nice.
Good, good. I was thinking about you as I had taken a look at the Great Panther chart myself over the weekend. So I know that's what you're calling about. How can I?
I'm calling specifically about what happened on Friday and the fact that, there were 17 million shares traded, and also kind of what happened at the end where the stock was going up. It was actually going up towards the close, and there was a lot of volume coming in right at that time frame. And then all of a sudden it dropped off, and I guess what the overall effect of all that is going to be on GPL.
Yeah, I when I saw the volume on Friday, it clearly it stuck out, and that's when I was thinking of you as well. Now, I didn't really. All I did was I went onto the internet real quickly and wanted to take a look at if I could find any news behind it. I just did a quick scan of any SEC filings. I didn't see anything that popped up on my screen out there. Were you able to do anything? Identify anything?
No, I wasn't able to do anything or identify anything, no, but I did get out of I was in it, and
right.
I got out because it was just, based on what you said and the fact that the gold market seems to still be bouncing around a bit down here, and so I just got out, and I was just curious as to what you think might be going on.
Well, I saw it, and my first instinct was what happened. What was the piece of news out there? What took place? And I couldn't find anything. It's out there. I just and I didn't spend a great deal of time. I mean, we're talking about between 5 to 10 minutes max on what was going on. But if we look at an intraday chart, the volume came into this thing right around the 3:30 time frame. So between 3:20 and 3:30 is where all the volume came in. Otherwise, it was just normal. And as the volume was coming in during that time frame, it was volume that was pushing to the upside in one sense. But this is you're looking at this as not so much a real long-term trade out there. And I don't know, from a capital standpoint, what you've allocated to it. It certainly concerned me seeing that volume and the fact that price had closed back below that 65-cent mark out there. So from a trading perspective, I would say that there are better stocks for you to actually, go ahead and trade out here. Now, here's one thing. Okay, let's see. At 9:30 on December 16th inside Great Panther, that's a pretty big volume spike. Now, I've got it on a 10-minute chart. So I hadn't put Great Panther on a 10-minute chart, and I can't remember how long. So on that trading session, as the market was opening between 9:30 and 9:40, there was volume. Let me get my... Give me a second here to get the data window up there. That bar, the top of which is 68 cents, had 502,000 shares. So if you want to trade this, the potential trade setup now, seeing that volume bar, is going to be a test of that low with lighter volume, 56 cents. So from a trade standpoint, if you can see this thing come down, test 50, get to 55 cents, let's say, and close back above that and do it with less than 500,000 shares, that might be your short-term trade setup there inside of Great Panther. But another thing to maybe suggest is if you're looking at the miners would really be to go through the laundry list of all the miners that are out there and try to identify which chart patterns look a little bit better from a trading perspective. If I pull up my mining page out here, and I'll do that along with you, and we just take a look at, as an example, some that might be better from a trading perspective. Let's take a look at Franco-Nevada as one of them, FNV, or we'll go take a look at Goldfields, I think, as perhaps another one. Even in Franco-Nevada, that's somewhat questionable too now. Let me just, I didn't scan through these here over the weekend. I was just too busy with some other things. But let me see what Goldfields, that may be a stronger looking stock chart here. There we go. So here's a stock chart that if we were to see a turn in gold, you might be better off trading this than a Great Panther. Now, that's a silver stock, obviously, but just staying in the mining sector. And the reason that I say that, Jerry, is that if we just simply take a look, if we use our retracement ruler as one of our guides to try to identify strength or weakness or compare, one stock against another stock, from the low here that took place on November 5th, that's its swing point. That low, by the way, was $3.09. That's in Goldfields. And we go all the way up to the December 10th high out there. That's at 467. This thing is basically only done a 0.382 retracement, right around the 407 mark. It got just slightly below that a couple of days, December 16th and December 15th, but not enough to really, in fact, if anything, it was just coming back into kind of a little bit of a breakout area. Now Goldfields also had big volume on Friday as well, so I don't know if there was some kind of rebalancing that was going on. I mean, there's big volume inside of that equity. So I didn't investigate all of the volume. I only noticed it really in Great Panther. So there was some big volume there as well. Let me put this on a 10-minute chart out here. Maybe there was, I don't know what was going on that caused all of that volume. And the case of Great Panther was really done in two 10-minute time period between 3:30 and 3:40 and 3:50 and 4 o'clock, right in the last two 10-minute trading sessions out there. So I think that this would be a better equity for you to look. Do you see what I'm looking at and how I'm kind of comparing things?
No, I'm not actually sitting at a terminal, so I can't see what exactly you're looking at. But I'll take a look at it.
Yeah, take a look at gold fields out there if you're looking. But what you're going to have to do, I'll put this chart also on the screen so you can watch the archive of it if you want.
Yep.
And this is a chart here that shows the gold contract is a continuous contract on the top portion of my screen. The bottom portion of my screen is the GDX, the Market Vectors Gold Miners ETF out here. It's weaker than gold. So what's important to understand about this chart is the direct, and I do mean direct correlational pattern between the direction of the price of gold and what goes on inside these miners. So in that first segment, did you catch the first segment of the show today?
No, I actually haven't. I'll listen to the archive.
Okay, yeah, go do that, because I just happened to pick out gold, and we looked at it from a monthly, a weekly, and a daily perspective out there. And that'll give you a better picture of what it is, that my overall view with regard to what gold is doing and what you should be focused on and paying attention to. So this thing will be re-racked here in about an hour or so. Go catch the archive of that. Watch you can take a look at the charts out there, because my opinion is, when I take a look at the stock charts out here, yeah, gold's making some higher highs, but it's up against some pretty significant resistance, and it should not have failed last week when it did the breakout on the daily chart. So I'm much more cautious with regard to gold at the moment.
Okay.
All righty.
All right. Thank you.
Hey, you betcha. Thanks so much for calling in. That was Jerry in Nashville, and happy holidays to you and your family. If we take a look at the markets out here right now, we've got the Dow's up 60. The S&P is turned just flat. The composite is up 3 points. Russell's up 350. Let's take a look at some things that are moving and grooving in the marketplace. Let's look at to the downside out here. We got the Gilead Sciences. GILD is the ticker symbol. Now, this thing has gapped down. Looks like a little hammer-style candle out here today. What it's done is it's gapped down into the trading session from October the 15th. Now, that trading session has 23.8 million shares out there. Today, big volume. Today, already done 12 million shares in that gap to the downside out here. Now, if it can trade all the way up and close that gap, then, okay, so be it. It's not necessarily a bad-looking stock chart, but the gap down here this morning, I'm not sure what the news is behind Gilead. But if it continues, if it closes inside that October 15th swing point, and even if it doesn't, but if it does, that means the high of 97.77 says that the low of that will likely be tested. That's about $91.73 out there. Anything else that's on the stock chart that really sticks out? I mean, nothing else as we take a look at Gilead. Also moving to the downside out here, you've got the Biogen, BIIB out here. Here is its daily chart. Maybe this is trading a little bit lower based on what's going on inside Gilead. I don't know that. But so far today, it did gap down as well. But if you take a look at it, and what I mean by that is if you look where the price closed on Friday, you can see where it opened today was in essence a gap. Now, not the same kind of gap that we were looking at inside of Gilead. This is not a bearish candle. In fact, this candle here is an inside. If the candle were to close right here today, you've got an inside trading session. It says the trend that it just came from continues. In this case here, that would be to the upside, and that is on Biogen, BIIB. You've got Altasource Portfolio Solutions. That's down 11%. ASPS is the ticker symbol. Looks like the chairman is going to be stepping down, and this is trading lower. Let's go try to figure out. This thing has had some problems here as of late. Some big volume recently. The further we take this back, the worse that the stock chart looks. How about this? Let's put this on a weekly time frame. That way we'll get a better picture for what is going on inside of Altasource portfolio. So this has got an A to B equals CD to the downside on this is the weekly chart out here. The B point was the week ended, or the week began February 24th back in 2014, 2.9 million shares. As price moved below that level, it was with volume with 3.2 million shares. That was the week that began August 4th of 2014. This thing looks like it wants to head down make a 1 to 1.272 at a minimum. A to B equals CD to the downside. That'll take you back to $32.08 out here. At 32.08, that's going to take you then back all the way to where this thing began basing back in the 2010 time frame. So, I guess no wonder he is stepping down. Let's see, what else do we have? Did we look at? Yeah, we looked at natural gas. So we looked at gold. Let's take a look. Let's take a look at a couple other gold miners out here. So now we've got a little bit of trading. Let's take a look at Rand Gold Resources. GOLD is the ticker symbol out here. Now this is the weekly chart. Let's let's leave the weekly chart out here for Rand Gold. What do we know about Rand Gold at this stage here? Last week it moved down and tested with the December 15th. Yet last week was 6.8 million shares, moving down into 6.7 million shares on the week that began October 27, 2014. So it was moving lower into that swing point with volume. It rejected it by closing up above that level, which is 65.86, but you're trading right now at 65.95. You close back inside there on a weekly basis as the lows are likely to be tested out here. Again, just like we took a look at gold and the GDX, you've got the I got to get a downtrend that is still in place out here. It has not proven itself. Let's take a look at, as an example, let's also take a look at Gold Corp. So you take a look at the number one weighted stock inside of the GDX out here, and that's Gold Corp. And if we take a look at what it has done, this thing here has a swing point from October 27, 2014. 57 million shares, and the low out there is 1701. And last week, 74 million shares. So you got 74 million shares moving into 57 million shares. Again, like we took a look at, I'm assuming that on Friday there's two. I don't want to assume anything, but let me switch. We'll switch back and forth here in a moment. Let me put the daily chart out there. Maybe somebody in the den knows what happened. Was a rebalancing or something that was going on inside of the miners out here for that volume. I know we had quad witching out there, but in any event, the big volume was 29 million shares on the trading session of Friday out here. Nonetheless, months from now when we go back and we take a look at the chart, we're not going to remember what that happened on that trading session. All we're going to know when we look at a weekly chart is that price was moving lower with accelerated volume, and it didn't test the bottom of that swing point. The bottom of that swing point from October 27th is 1701. So right now, the only information that we've got is that's what Gold Corp wants to do, is go test 1701. So when you take a look at the GDX with the weighting that this has inside there, this says that the GDX will go ahead and move lower, and we'll take a look at what we looked at for gold on the monthly, on the weekly, on the daily out here. It has not proven itself. It absolutely has not proven itself to the upside. That doesn't mean it's 948 that at 949 something else can happen. We just need to go with the information that we have at hand out here. Moving to the upside this morning, we've got Amazon, ticker symbol AMZN, up buck 450, up about 1.5%. Here's the weekly chart for Amazon. Of course, the beautiful chart in Amazon is the monthly chart. As we put that up on our screen out here, that monthly chart shows that price had moved down right into, so this is going to be important for us to take a look at, right into a level of support. Let's use the red line. Oh, we should use the green line. Forget about the red line. Let's use the green line out here. Where's my green line? There we go. Let's come off of the swing point low from November 2008, and here is the trend line inside. This is an important trend line here for Amazon. So what did Amazon do last week, or is it doing this week? What does that say, December 1st? Oh, it's a monthly chart. This is a monthly chart that we're looking at. It's just simply it has come down and it has held this little trend line. That's a long-term trend line. If you see price get below that, that could be double trouble. Back to the daily chart out here for Amazon. Let's go see what it's doing here today. Price has come down. It's tested this trend line. Obviously, last week it did that on the trading session of the 17th as well as the 18th. Moving a bit higher this morning. Volume behind the move about 500,000 shares. To the downside on December 16th. What was that? Monday, Tuesday, Wednesday, Thursday. Looks like Tuesday out there. 6.5 million shares to the downside. This is Steve Rhodes. This is TFNN. Right.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 76 points, trading out of 17,880. S&P is basically flat. It's up 1 point. Composite's up 8. Russell is up about $2 right now. So let's take a look at, we didn't look at any of the currency pairs out here. Let's do that here before we end the show. Let's take a look at your favorite currency pair in mind. That's the Euro Japanese Yen. She's trading to the upside here this morning. Of course, that bodes well for the market. Nice liquidity gauge out here. This is the carry trade. This currency pair trades in the direction of the really carries the direction of the U.S. Stock market out here. So it's just trading to the upside. I don't see anything that's really too bearish about this currency pair out here. If it takes out these highs from December 8th, that's up at the 149.78. I don't know that we're going to get there today. I don't know if it's going to get there at all, but if it does, that would bode well for the bulls. Very bad for the bears out there. That's the Euro Japanese yen. Let's take a look at the Euro US dollar index out here. What we know about this is just like gold failed at its trend line, so has the euro. The euro here really attempted a breakout. It hasn't been able to break out against a downtrend in quite some time. It broke out on December the 10th. It stayed above that until the trading session of December 17th when it came back and it got back inside the trend. In fact, if we take a look at the euro on a longer-term basis, let's go ahead and put the weekly chart up on our screen out here. The weekly chart for the euro, there is absolutely nothing bullish about this stock chart out here. What it is trying to do, it looks like to me, is get back and test these lows on the weekly chart back from July of 2012. I'll put a line across my screen out here, a horizontal line. You can see that price is trading inside that swing point. That swing point top is 1.2390. Until you see the euro get above that, the assumption has to be that the euro is going to go test the low. What's the low? That's an excellent question out here. Let's go take a look at the bottom of that swing point, which is 1.2042. So it looks to me like that is where the euro is headed to, unless we see some other type of break of the trend line, some type of reversal candle. And if we don't see that, look for the euro to move down and test those lows. Of course, if that happens, the U.S. dollar index again is stronger. Basically, from a correlation standpoint, if the U.S. dollar index is getting stronger, gold, silver, the commodities ought to go ahead and get weaker out there. So the key, one of the keys with regard to the direction of where the mining stocks, where the miners are going to go, is certainly going to come from the euro. And, tell me, look at this stock chart and tell me what am I missing here that says that this thing is moving higher out here. It's a failed breakout attempt. Is it a coincidence that when we took a look at gold and it had failed at its breakout, and now we take a look at the euro, any coincidence that there's a correlation here? No, of course there is no coincidence out here. We have not yet seen any kind of reversal signal inside of the euro. Can that happen at 9:58, less than a minute from now? It most certainly can, but as we speak at 9:57 and change, the answer is no way. If we take a look at the Japanese yen out here, trading out at 119.86. Of course, I have about a 10-minute delay, I believe, on these currency pairs out here. Just like we looked at the euro Japanese yen, looks like this is going to make its run. Only made a 0.382 retracement and a nice little bullish reversal candle on December the 17th. This could be one large A to B equals CD to the upside. I suspect that is what we are looking at. And inside of the Japanese yen, what that's going to do, that's going to give you a price target, another price projection, not just of 132.21, but more likely 136.74 out there. That ought to work out real well for the Nikkei. So, folks, if you are off to start your day, if you're traveling, be safe out there. No drinking and driving. And as always, thanks so much for tuning in to us here each and every morning. And if you are sticking around, that'll be great, because hour 2 of the Trader's Edge will be up in about 8, 9, 10 minutes. Have a great Monday, folks. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.